Hello and welcome to BQ Prime. I'm your host Vikas Srivastav. Today we have with us Mr. Naivedya Agarwal. He is the co-founder and CEO of Runaya, a company which has uniquely positioned itself as as someone who is into sustainability as well as recovery of metals from scrap and waste. Welcome to BQ Prime, Naivedya.
Thank you,
It's
Vikas.
our pleasure welcome you.
Thank you.
And it will be very beneficial for our audience if you can initially take us through like what exactly Runia is into, and then we can take forward other questions.
Perfect. Thank you so much. So, Vikas, at Runaya, we have two business verticals. One is our vertical of recovery of metal from waste, as you mentioned, and the second vertical is around technology-enabled manufacturing. Because as a company, we firmly believe that technology and sustainability would be the biggest drivers, of both growth, profitability, in the broader, resources and manufacturing sector for the next, 20 to 30 years going forward. And going a little bit deeper into our two verticals, on the sustainability side, we have one business through which we recover very, very low carbon footprint aluminium from aluminium waste, where the aluminium that we recover actually has a carbon footprint of only about 400 kgs of CO2 per ton of aluminium,
Okay.
which, if you look at the global benchmark for green aluminium, is actually at 4 tons of CO2 per ton of aluminium. And if you look at coal power fired aluminium, it's at about 12 to 13 tons of CO2.
Oh,
So we are, far below both, far below even the green benchmark to be qualified as low carbon aluminium. And once we cracked aluminium, we really looked to see what the other opportunities in the industry were. And so we identified a large potential in zinc waste.
okay.
And zinc, there is mining waste and there is smelting waste, in which there are fairly significant quantities of a lot of minor metals and new age battery minerals like lithium, cobalt, antimony, bismuth, cadmium, etc., which have real world value today.
Right.
And then if you look at our technology enabled manufacturing businesses, we have two businesses here. One, we have a joint venture with an Australian company called Minova, who are global leaders in ground support solutions for infrastructure projects and underground mines. That essentially, once you do the blasting of the tunnel, these are the products, the steel bolt and resins that actually stop the tunnel from collapsing on itself and make the environment underneath safe to both work under and drive through, etc. And then we also make, in our fourth business, we also make central strength members, FRP rods,
Hmm.
for the 5G telecommunication industry.
Right. So taking it forward from your what you mentioned about aluminum and zinc. So which are the sources from where you are getting your raw material or your scrap? Basically before you convert it into.
So currently, we've tied up with two smelters in Orissa, two suppliers with our raw material on the aluminium side, and we are actively engaged with a lot of the other primary and secondary manufacturers of aluminium, because our process is modular, so we don't need large capacities of aluminium to set up our manufacturing plant. So
Okay.
we've tied up with, and we're in the process of tying up with a lot more smelters. And coming to the zinc side, so today in India, there's only one large producer of primary
Just to
zinc.
interrupt you, when you talk about primary manufacturers, so who are these manufacturers from where you?
So in India, primary manufacturers are Vedanta, Balco, Hindalco, and Nalco are the
Mhm.
primary manufacturers in India. And then, of course, there are secondary manufacturers as well. And when it comes to zinc, there is only one manufacturer
Right.
of zinc in India today, which is Hindustan Zinc.
Right. So you are sourcing from all these manufacturers,
We are
right?
sourcing from all of them.
And in terms of total tonnage, how much scrap you are getting, and what is the kind of volumes that you are generating at moment?
So today, on the aluminum recovery side, we recover about 4 to 5,000 tons of aluminum of processing capacity every month.
For our audience, can you explain what exactly is dross capacity when you talk about?
So when you manufacture primary aluminum, you generate about 2%, 1.5 to 2% of waste, which is called aluminum dross, which is generated in the cast house.
Mhm.
And currently smelters are either storing this waste or are doing basic processing to recover, say 15-20% of the aluminum content inside, and landfilling the rest or storing the rest in sheds. What we are able to do with our technology is we recover more than 90% of the aluminum that is in the dross, which comes to about 45% of aluminum by weight of the dross. We're able to recover that, and give that back to the smelter as the low carbon aluminum. And then the balance material that is left, we add a few chemicals and binders and actually sell it as briquettes to the steel industry. But even there, we are now, we have an in-house innovation center where we're working to develop newer and newer products, and higher value added products from the balance residue, where we're evaluating aluminum fluoride, high purity alumina as more value added products. We're working with the likes of IITs and institutes in Australia to see how we can get more value out of this waste rather than as a standard briquette.
Okay. So can you explain your business model also to us? Like you source it from these companies, which is a waste for them. So what is the kind of payments that you make to them, and the kind of value that you add to the product, final product? Then who are the buyers for these products? Who are you selling it to in the market? Right?
So this is a very unique business model, because the our raw material is actually a problem for our customers. So we we're doing them a favor, so to speak, by taking away a raw material. So we get our raw material on the aluminum dross processing side for free
Okay.
from the smelter,
Mhm.
with the understanding we get a processing fee to process that raw material,
Okay.
and we give the smelter back all of the aluminum that we recover is given back to the smelter, and then the balance residue that is left is ours to process further and sell. So it's a dual income model where we get a processing fee for recovery of aluminum as well as get the sale of the byproduct.
Okay. And that is sold to whom, the byproduct?
So the byproduct currently we sell to all of the steel manufacturers in
Okay.
India. It's used to replace primary aluminum in the ladle refining furnace. So we sell to JSW, Jindal Stainless, Tata Steel.
Okay. So the company has grown to almost 1,000 crore rupees in terms of turnover over the last 5 years since your inception, I think.
So not exactly. So FY23, we did about 300 crores of revenue.
Okay.
And in FY24, we will reach about 950 crores of revenue this coming year.
Okay.
Out of which, out of that jump of 600 crores, about 200 crores, 300 crores will come from expansion and sort of full capacity at existing operations. And 300 crores will come from a minor metal business, which is the recovery of the minor metals from zinc ore, which is which was just being commissioned today.
Okay. So what's your plant capacity and where exactly you have your plants right now? So one for aluminum and the other for zinc is getting
For
commissioned.
zinc is getting commissioned. So in phase one on zinc, we are recovering cadmium, antimony, bismuth, copper matte,
Okay.
along with some amount of zinc, lead, silver. And on the aluminum dross processing side, our facility is located in Jharsuguda in Odisha.
And the zinc one you said is where?
It's in Rajasthan, right next to the HRL smelters and mines.
Okay. And how much it will produce in terms of capacity?
So capacity actually, is fairly flexible in this industry, because it all depends on the metal content in the ore. So we actually look at it in terms of raw material processing capacity rather than as an output.
Okay. And also to talk about investments that will go into these process houses, what's the kind of capex that you have lined up for FY24 and also for say next 2 to 3 years? Where do you see your company in say next 5 years?
So in terms of capex, already we spent about 400 crores of capex to date. We are looking to spend another 400 crores this year,
Okay.
which will primarily be on the minor metal side,
Hmm.
for recovery of these the minor metals,
Yeah.
from zinc. And if you look at the next, 3 to 4 years, between the minor metal business and a couple of other projects that we have under development, we're looking to spend about 2,000 crores in the next 4 to 5 years.
Next 4 to 5 years. And as far as your equity stake is concerned, do you have some foreign partners, or are you looking at some kind of foreign investment given the kind of landscape for your business that you see in the next 5 years?
So currently, we have entirely bootstrapped and sort of self-funded through our family office. And because we have excellent relationships, we work with all of the large banks, so we're able to get debt financing very easily. Also because of our project economics, where all of the businesses in which we are, we've been cash flow positive from day one. We have 30% EBITDA margins. So for us, funding is not a problem. But that being said, we are open to evaluate the right investor. We don't need the funding, but if the right investor were to approach us, we would be open to taking in outside equity.
Right. Uh, Before our interaction, you also spoke about that the company is looking to enter into rare earth metals kind of business, and also you have tied up with an Australian company for other businesses. Can you elaborate a little bit more on these businesses?
Yeah. So coming to rare earth magnets, this is something that we're extremely excited about. As we
It's only rare earth magnets, or it's rare earth metals also?
Rare earth magnets.
Magnets.
Very specifically the magnets. And these magnets are primarily used to power EV motors, as well as bladeless motors, whether it's an AC or a oven, microwave, refrigerator, or a fan. And what these magnets allow the motor to do is to be a lot more efficient in its power consumption.
Okay.
And then in terms of technology, we're actually evaluating technology partners, in Australia, South Africa, Canada, etc., more for our minor metal business, to recover more and more metals from tailings.
Okay. Can you explain a little bit more on your earth magnet business? How soon you are looking into it, and what kind of businesses you are looking to tie up with for this?
So we are currently in the stage of technology identification, where we are in touch with few companies to evaluate who we want to partner with, who the right partner for us is. And we are looking to sort of start our project towards the end of this year.
Okay. And finally, if you can talk a little bit about your finances, like what's your debt position right now, and would you be looking to raise more funds going ahead?
So right now, in terms of financial position, as I mentioned, we're cash flow positive, and we're 50-50 funded debt and equity. And so we're not in the position where we are looking to actively raise funds, but as and when projects come up, we will evaluate a mix of equity and debt funding.
Okay. Thank you very much for sparing
you.
time to talk to us. It was our pleasure.
Thank you.
Thanks.
Thank you.